we are continuing with our coverage here at the Noosa Mining and Exploration Conference, and with me now is Duncan Hughes. He's with Gold Road Resources. It's a junior exploration play here in Western Australia. Welcome to the show, Duncan.
Thanks very much. Welcome to Australia.
Yeah, and I'm not going to lie, I'm happy to talk gold again because I've covered everything here from bauxite to lithium to cobalt, so this is definitely in my wheelhouse here. We're going to get the latest from Gold Road Resources, an update, but first, I want to get your take on, a hot topic here at the show, peak gold, and whether we are experiencing it right now.
Yeah, it's an interesting sort of topic, that one. I had a taxi driver talking to me about it in Perth, so it's obviously very topical.
You know when something is topical, when the cabbies start talking, yeah.
That's right. Well, look, I think the point is people are saying, oh, you're at peak gold. With oil and gas, well, you've got fracking, so there's the technology enhancement. A miner's going to struggle with peak gold? I don't think so. Yes, it's getting a little bit harder to find these easy to discover projects, but there's still, Gold Road, for example, their Greer deposit is still a large, easily mineable deposit that's at surface, so they still can be found. But it's fair to say that going forward, people have to start looking a little more remotely, they'll have to start looking deeper. But I think we've got technology to take us there.
So then, Duncan, is that not a bullish case for gold?
It is a bullish case for gold. So if we were at peak gold, and personally I don't think we are, but if we were at peak gold, then supply and demand tells you that the price is going to go up. And if you're a developer now or a producer now, you're going to make better margins. And that's obviously good for you. And you'll also be able to bring into production a lot of what currently uneconomic deposits will come in. So there's growth opportunities for people in the gold space there. But in terms of technology, because that's something that's talked about a lot in oil and gas, for gold there's a lot of technology coming in. There's a lot of automation, there's underground mining equipment now is automated. That's much more efficient and cost effective than how we used to do things. In exploration, you're able to look under cover being the layer of sand or whatever that masks the geology underneath. We're doing that. So we've got this situation at Gold Road where we've got a brand new greenstone belt, which is a host for gold deposits in Western Australia, which is under a thin layer of sand on the edge of a desert that people thought for years there was nothing there. But new technology, geophysics, geochemistry, has opened up that ground and the opportunities to explore.
So it's been a tough summer, I guess, as most are, for gold prices here, really struggling. But what amazes me about this conference compared to some I've attended in North America is that despite the stubborn gold price right now, people are coming out to hear the story still. They haven't given up on the metal. So, despite the rally, you could still make money in this space.
You can, and I mean, this has been a great conference and a fine example of how people are still bullish about the space. So there's two sides to gold production, I guess. There's a North American case where there's been a few relatively prolific fails and disappointments, and there's also been competition for capital in North America from medical marijuana and Bitcoin. Yeah. In Australia, we haven't had that. Our producers are actually producing record production, record profits, record dividend payouts, and they're still making good margins. Now, some of that's down to the currency, that's helped us obviously, but a lot of that's just down to we've had some hard times and we brought in efficient production, and that is allowing margins of about $600 an ounce.
And Duncan, with so many companies here, how can an investor sift through and know who has a good deposit or not?
Yeah, no, that's.
I know it's a loaded question, but what's the criteria?
It is. There's so many facets to it, but in simple terms, you look for a producer that's got low all-in sustaining costs. So, Gold Road is looking to produce at $9.50 Aussie or 700 US. So that's great margins on the current gold price and any consensus view on it. But you're also, I would prefer something in a safe, solid jurisdiction like North America or Australia. So they're the simple things, but then you delve a little bit deeper and you look at things and you want something that's simple to mine, simple to process, so good recoveries. You want scale, and grade is always going to be king in any deposit. But you want, as an investor, I'd like to look for upside as well. So I'd like to see that there's exploration upside there too.
So let's get to know GOR, ASX listed, Golden Road Resources a little bit better now. Do you consider yourself an explorer or developer?
That is a good question. We're somewhat of a hybrid because we're 9 months from production, and it's a tier 1 asset that fits all of those what to look for in gold. It's simple processing, simple production, it's scale. So on the one side, in 9 months' time, we'll be producing cash flow. We're having it built in joint venture with a major, Gold Fields. We haven't had to take on a lot of debt, so we'll be in a position to use that cash flow for growth in exploration or to pay.
Yeah, you have some pretty big names invested in the company.
We do. We have a very strong register, and that's part of the reason. But the way I like to look at us, and I'm an explorer at heart, is we're a greenfields explorer with a brand new greenstone belt, the largest greenfields exploration budget in Australia, and about to be underpinned by cash flow. So we won't have to go back to the market for equity. Generally, one thing I love about grassroots exploration is the upside is to the sky, but quite often it's a bit of a punt and the downside is zero, i.e. you've got no value. But we're underpinned by a tier 1 asset.
But how do you mitigate the risk that comes with being an explorer?
That's something we've been doing since we started life in 2007. Discovery is not an easy thing, and to mitigate that risk, when we had a share price of about 5 cents as opposed to 75 cents, we did joint ventures to share some of the risk and maintain control of the belt. But we also, in what we do in exploration, we are systematic. Systematic exploration is essential. So we have milestones of different projects. We continually review. Internally, we have an engineer and resource geologist. We look at things, and is this actually going to be the thing that moves the dial for shareholders? We don't want to spend a lot of money like some of our peers have done, drilling out a resource that's not economic. That's no value to shareholders.
Well, Duncan Hughes, continued success. Best of luck. Thank you for chatting with me today.
You're welcome.
Yeah, and thank you for watching. We'll have much more for you on Kitco.com. Thanks, Duncan.